Hello everyone and welcome back to my channel. Today I'll be doing the CSEC Principles of Accounts mid-June 2016 paper 1. I also would love to take this opportunity to say thank you to all you loyal students and adults who have been supporting my channel. I really do appreciate it. And if you're stopping by my channel for the first time, please go ahead and hit that subscribe button and turn on your notification bell so that you know when new videos are being uploaded. You will learn a lot from this channel. There's no doubt about that. Also, give this video a thumbs up by liking it. It does well in helping it to reach as many students as possible in preparation for the upcoming exam, which is just around the corner, so to speak. So let's get into this paper. Also, this is going to be a two-part video. Part one, we'll be looking at the first half of the questions, the first 30 questions, and then part two, we'll be looking at the rest of the paper. So make sure you hit that subscribe button to know when part two is out. Also, you notice too on the videos, there are ads that are playing. I know they can be annoying at times, but just take a little break during that time. Don't skip them because it is your way of saying thank you, miss, for the hard work and effort and time that you put in preparing these videos so that you personally can benefit from them. So let's get into this. The first question says, a non-trading organization is mainly concerned with. Well, we have done this question in the past. This is not a new question. We have seen it before. So we know that a non-trading or a non-profit organization is an organization that does not trade. They're not engaged in businesses. They're more of offering services to their members. So A, B, and C we know would be out. So our answer is D, providing various services for its members. 2. The term accounting refers to this is not a new question either. It refers to C, recording, analyzing, and interpreting of business information. Let's go to number 3. Which of the following accounts are nominal accounts? What do you recall from nominal accounts? Well, we know that nominal accounts is an account in which expenses, revenues, and capital are recorded. So, what would be our answer for this one? And remember, in previous videos, I had explained why we would not select the other answers, why they would not be correct. So I'm just going to go ahead and give you the answer for this. So make sure if you haven't watched those videos, go ahead. There's a link somewhere on this video or in the description to watch those videos. So A would be your answer. Let's go to 4. How would you classify land and buildings in a balance sheet? Now, this one is very easy, a giveaway. We know that those are fixed assets. A. 5 cells, which group of assets below is recorded in the order of liquidity? I had explained this even too in details. So we know order of liquidity have to do with the order of the assets when it comes on to a balance sheet, a company's balance sheet. So the assets that is converted into cash. First, we usually start off with cash, the order in which it is presented, how long it would take. So we know cash we are looking for in our answer. So right away we know C and D using the method of elimination would be out. Cash does not require a long time to be converted. So that's why we know it will begin with cash. Now we're stock. So B, cash, stock, buildings, and lands. So B would be your answer. So B, let's go on to number 6. So item 6 refers to the following balance sheets. So there you have your balance sheet. 6 says the value of total fixed assets is. So we know what our fixed assets are. So let's look for them. Land, there is one, 4,000. Motor vehicles, 8,000. Yes. Fixtures, 2,600. So there we have it. So we need to add all those. And therefore, our total would be B, $14,600. Let's go to number 7. The summarized position of Foster and Scott Limited at 6th of March 2015 was, so we have current liabilities $60,000, current assets $100,000, fixed assets $200,000, long-term liabilities $150,000. What was the capital of Foster and Scott Limited at 6th of March 2015? So we know we are going to deduct our assets from our liabilities. Now, our assets, total assets, current assets and fixed assets, that's 300,000. Or current liabilities and long-term liabilities, that's 210,000. So when we deduct or subtract 210,000 from 300,000, we're left with 90,000. So our answer for number 7 is B. Let's go to number 8. It says, if the following list of assets found on the balance sheet of a retail trader were to be arranged in order of liquidity, the sequence would be, so we know we're looking for our sequence. So we know cash, yes, then bank, right? Then we would have debtors. Debtors would come before fixtures. Then motor van, fixtures, then building. Okay, so D would be our answer, the order. So we always know that order of liquidity begins with cash, as stated earlier. So item 9 refers to the following information about the assets and liabilities of Mr. Jones. This is not a new question either. We have seen this one on past papers already that we have done. So we know cash at bank. So we're looking, so we're identifying, it says from the information above, Mr. Jones' capital amount. So we're looking to find the capital. So what do we know about capital? That's assets minus liabilities. What is our assets? So we know we have cash at bank, 800, inventory, there we have 400, and accounts receivable, 125. And then we have cash in hand, 500. So when we add all of those together, we get 1,825. And then our liabilities now would be our accounts payable, 600, and bank overdraft, 250, which is together, that's a total of 850. So we deduct the 850 from the 1,825, and we're left with D, 975. Let's go to number 10. It says, a firm sold 50 items at $80 each. Of these, 9 items were returned. Which of the following will the firm issue in respect of the items returned? A, debit note for $720, B, credit note for $720, C, receipt for $720, or D, invoice for $720. So 9 items were returned. So we would therefore multiply 9 by $80 each, and that would give us $720. Yes, so we know. But what about the $720 now in respect, because the items were returned? So that would be B, credit note for $720. So B would be our answer. 11 says, a trade discount may be described as an allowance given A, to attract buyers, B, for quick payments of accounts, C, when goods are of a poor quality, D, to traders who buy in large quantities. So we know that is D. So a trade discount may be described as an allowance given to traders who buy in large quantities. So that would be your answer. Let's go on to number 12. Item 12 refers to the following information for the books of a company. So we have cash sales, credit sales, stock on hand, drawings, cash purchases, and credit purchases. And there you see the figure. So 12 says, from the information above, what is the correct closing total for the sales account? So we're looking for what affect the sales account only. So therefore, cash sales, $10,000, that would affect sales account, and credit sales, $45,000. So that's a total of $55,000. So that would be our answer for 12. So C would be your answer. Let's go on to number 30. It says, which of the following would not appear in a cash book? A, payment for goods, $100. B, goods sold on credit, $100. C, goods sold for check, $100. D, goods bought for cash, $100. So this one is B, goods sold on credit for $100. That would not appear in the cash book. 14 says, on the 12th of January 2015, a merchant purchased goods amounting to $120 on the following terms: 5% cash discount if paid within 30 days. He settled his debt on 28th of February 2015. How much did he pay? So now, so now, so now, notice it says he paid $120. 5% cash discount would pay within 30 days. But look, he settled his debt on the 28th of February. So he would have not gotten any discount because that was way past 30 days from the 12th of January to the 28th of February. February is by a month by itself, so that he would have not received a discount. So he would still pay C, $120. Let's go to 15. When a proprietor withdraws cash or other assets from a business, what effect does it have on drawings or capital? We know that capital, what happened to capital? It is decreased. So A would be your answer. 16 says, on the 2nd of March 2015, L. Lan bought goods on credit worth $630. He received a 3% trade discount on this amount. The invoice also stated 2% 20 days, net 30 days. How much would L. Lan pay for the goods if he pays on the 8th of March 2015? So the 2nd to the, and he paid on the 8th. So that's 6 days, 6 days span. All right. So now, so what do we have to do? First, we would have to find 3% of $630. And you're going to get $18.90. And then now that $18.90, you deduct that from the $630, and you should get $611.10. And we now have to find that 2% of that, $611.10, and you should get $12.22. And what we do now, we deduct all those deductions from 630. So we're going to take the $18.90 and the $12.22 from that, and you should get B, $598.88. Let's go to number 70. When money is taken from cash and paid into a bank account, the recording is referred to as A, the imprest, B, a contra entry, C, cash takings, D, personal drawings. We know that is B, a contra entry. Let's go to number 18 now. Number 18. It says the ABC company deposited a check for $300 received from Mr. Murray. How should this transaction be recorded in ABC books? 1. Debit the cash account. 2. Debit the bank account. 3. Credit Murray's account. So what would be from our answer there now? What would be our selection of our answer? What do you think would be the answer for that? Now, if you say C, then you are correct. 2 and 3 only. Let's go to 19 now. 19 says, which of the following is not a nominal account? So we know that. What would be our answer? A, furniture. A, furniture. All the others are. So that one is not. That's crucial when you see questions like this. It means that all 3 of the answers are and 1 is not. So 20, an asset purchased for $1,000 is depreciated at the rate of 10% per annum using the reducing balance method. The book value of the asset at the beginning of the 3rd year is. So we know that with the reducing balance method, it's a fixed amount that is deducted from the cost for the 1st year. The 2nd year, it remains the same on the reduced balance method. So we therefore find 10% of $1,000. Now that would give us $900. And I said $900, sorry, 10% of $1,000 is $100. And then we deduct that $100 from the $1,000. That will give us $900. So that's the first step. Now, the 2nd year, now we're going to have to find 10% of that $900. And that would give us $90. And then we deduct that $90 from the $900, which would give us $810. So at the beginning of the 3rd year, that's your figure B. So there you have it. So there you have it. So let's get into 21. A mechanic starts his business with $10,000 worth of tools. What entries should be made to record his transaction? Now we know he would have to debit tools account and credit capital account. So C would be your answer. Let's move on to number 22. Goods were sold on credit to John Brown. Which of the following is the correct double entry to record his transaction? So if goods were sold to John Brown, so we know that we're going to have to debit John Brown's account and credit sales account. So A would be your answer. Let's move on to number 23. MK Trucking Company received a check from Mrs. Henry. How must this transaction be recorded in MK Trucking's books? 1. Credit the cash book. 2. Credit Mrs. Henry's account. 3. Debit the bank account. 4. Debit Mrs. Henry's account. So what would be your answer? Option. So credit Mrs. Henry's account and debit the bank account. So C, therefore, would be our answer. Let's go on to number 24. So item 24 refers to the following information. And there we're going to have to find the value of the inventory stock. So there you have your number of items and your invoice per unit and your market price per unit. Now, what is the value of inventory stock? Now, I want you to work this out and tell me the answer. I can give you a clue. The answer is between B or C. Let's give you those 2 options. The answer is there. So I want you to work it out and tell me, and I'll let you know if you're correct in the comment section. Let me know down there. An increase in drawings will result in, so we know that will result in B, a decrease in capital. All right, let's go to 26. So item 26 to 27 refers to the following information. All right, there we have our balance sheet. it says, what is the working capital? So we know working capital is current assets minus or subtract our current liabilities. So our total current assets there is $25,000 and our current liabilities creditors 5,000. So deduct minus 5,000 from 25,000, we get 20,000. So 26 answer would be A. Let's go to 27. 27 says, if $2,000 worth of stock is sold on credit at cost, what would be the new working capital? I want you to think on this one. I can give you a clue. The answer is between A and B. Let me know in the comment section below. I want to have your input on these papers, working on them along with me. Let's go to 28. It says, during the year, a company bought stationery for $220 and used $120 worth of it. What is the expenditure for stationery that would be posted to the profit and loss account? This one is a repeated one. We know that the answer for 28 would be B, the same $120 worth that was used. 29 says, a trader started with capital of $20,000 in the bank. If $12,000 of it was used to purchase building and plant, the balance of $8,000 would be A, drawings, B, total assets, C, working capital, or D, current liabilities. We know that would be working capital, C. Let's go to our final question for today. It says, the formula for working capital is A, total assets less total liabilities, B, fixed assets less current assets, C, fixed assets less current liabilities, or D, current assets less current liabilities. We know that's D. We have just worked out it. So this is it. We'll be stopping here. Make sure to stay tuned for part 2. Thank you so much for watching.